Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Inventa Capital.
Since co-founding Franco-Nevada in the 1980s, Pierre Lassonde has seen his company grow to a behemoth in the royalty and streaming space with a current value of $34 billion. Pierre, always great to have you on Kitco.
Good morning. It's a pleasure to be here.
Well, let's make it good. Let's start with some good news. Let's talk about gold. We've had a bit of a rough patch in this year, but you say, according to what's happening with the dollar and also cryptocurrency, it looks like 2023 should be good for the precious metal.
Yeah, I think a lot of gold bugs are asking themselves the question, like with inflation running 7-8%, why hasn't gold responded? And the answer is 80% of the value of gold long run is tied to the US dollar. So the last 4 years, the dollar has been on a tear, and it's essentially suppressed gold demand. The other reason, as you mentioned, is the cryptocurrency. There's no doubt that the cryptocurrency went from nothing to a $4 trillion industry in a space of less than 10 years. And the entire Gen Z generation got attracted to it, and it stole, we estimate, between 20 to 40%. We don't have real numbers, but 20 to 40% of gold's liquidity. So with that market imploding and with the dollar now rolling over, I sense that 2023 is going to be the year of gold.
We are in a tightening phase right now with the Fed. Is the U.S. in a recession?
That's an interesting question, because the U.S. has about $2.3 trillion of over-savings still from COVID in the bank. So technically, I think they're going to see a slowdown. They will more than likely have a recession in the real estate market, because 9% mortgage rate will kill the real estate market in the U.S. But whether it's going to go into a full-blown recession, I think is, we're not sure yet. Europe absolutely is in a recession and will be for the next 2 quarters.
Let's talk about gold as vis-a-vis the American dollar. There has been reports on that the U.S. is losing its, the U.S. dollar rather, is losing its reserve currency status just with the financial sanctions due to the Russia-Ukraine war. And there's countries that are looking for alternatives, just what was actually happening with the financial regulations. So the BRIC companies, for instance. Do you see that there's going to be a replacement to the reserve currency for the dollar?
Well, the problem is there is no replacement, okay? Like, when you look at the alternatives, the euro, but the euro is a construct that no country really owns. So, it's not like the US dollar is backed by, the Federal Reserve, it's backed by raising taxes. Well, the euro is not. The yen is too small, and the yuan is a controlled currency. It's not a free-floating currency. So if you've got billions, where are you going to put them? There's no alternative. And, yes, a lot of countries are doing trades in, I have a friend here who has in Switzerland, who has a textile business, and is now selling to the Chinese in Swiss francs, okay? Small, but that's happening all over the place. So yes, there's a lot of countries and companies that are moving away from the dollar. But at the end of the day, if you've amassed billions and billions of dollars and you want to put it in something liquid, something safe, there's no alternative.
You gave a talk yesterday. You said something interesting about the real theme that's been developing in mining over the past couple of years has been critical metals, battery metals, the metals that are going to supply. And then you see some of the companies that have taken off in the lithium space, the cobalt space, the nickel space. You said that you kind of found the area, though, uncertain right now. Why?
Well, at the end of the day, I'm not sure that the current battery technology is good enough to transit from an oil-based society to a green society. The battery is already at 95% capacity, just like the lead-acid battery. It reached a point back 30, 40 years ago. That's it. That's your maximum loading. Mm-hmm. And the current technology is getting right there. And it's just not good enough. You're not going to get, millions of people that have, electric cars. If you try to go to your cottage, it's 2 hours away. You can't charge. You get range anxiety. For towns, absolutely fantastic. If all you're going to do is putt around a city, electric is the way to go. But at the end of the day, I just don't know if the technology is good enough. And the R&D going in battery and materials right now is stupendous. And my sense is that over the next 5 to 10 years, you're going to see new technology, and they may not involve lithium, they may not involve cobalt, they could be totally different. So I'm like, the one constant that I know is that we're still going to need copper, okay? Because copper is the only thing that transports electricity, and you're going to need a heck of a lot more. So that I know, and you're going to need gold as well, because the dollar is going to keep getting depreciated. So those are my two commodities.
You said Nirvana is a gold and copper project.
Yeah, if you can find a copper gold deposit with 50-year life, man, you've got it made, okay? Like, to me, like, that is the absolute best in the world, absolutely.
Just prior to doing this interview, you said something interesting, and that it was just judging a mining company, a resource company, and then you said you need to have, how would you say, 3 assets to protect yourself.
Yeah, in my playbook over the years, looking at companies who have succeeded, companies that have really made an impact and that have been able to grow, I found that single asset company are just too dangerous. You're right there. You could be exploited by the government where you are. You could have a mining failure. So and having 2 is better, but a minimum of 3 creates a company where finally you have stability in your cash flow, because you can take from one the other. You have predictability. You can hire people, move them around, grow people with you. And so when I kind of foster companies, you can start with one asset. And my playbook, for example, is start with an open pit heap leach operation. It's easy to construct, it's cheap. On a capital efficiency, it's the top of the list, and you get cash flow immediately, and then just build from there and essentially marry up, okay? Like, find something that's, a little bit better, longer life, because these heap leach are like 10, 15 years. Get something 20 to 25, and then if you can hit the nirvana, like something that's like copper gold with 50-year life, you got it made.
There was a trend moving towards first-tier mining jurisdictions. I think of all the M&A that was happening in Canada like a couple of years ago, and just kind of moving, I guess, kind of to safer jurisdictions. Going back to having 3 assets as well, too. If you have something based in Canada versus an emerging market, is it considered safer, or is it something that there's always going to be risk there? What can happen just through happenstance?
There's risk in every country, and I still have in mind, Newfoundland.
Yeah.
Under Mr. Tobin, they passed a law where you had a 10-year tax holiday if you found anything in Newfoundland. The minute they found Voisey's Bay, they changed the law. Okay, so don't tell me that Canada is safer. Okay. From an environmental standpoint, much safer, because you have laws around it, and once you're permitted and everything else, actually your ownership is secured. So there is advantages to have multi-jurisdiction assets. So having one in Canada, one in the U.S., one in Mexico, you got a fabulous setup. Australia, Chile, but more than 3, at least 3 assets, I think is where I find the minimum to build a big company.
Is this inflation, turning back to macro, is this inflation, is this analog to the 70s?
It's very much so. Actually, yesterday at the forum, I was asked that question, and absolutely. So if you look at the 70s, the first phase of inflation, 73 to 75, was the oil embargo, where the oil price went up 10 times, and that hit consumer price at the pump and transportation and everything else. And then inflation subsided, and then the second wave of inflation was 76 to 1980, which was wage inflation. And that, I believe, is what you're going to see starting this year. You're going to see strikes, you're going to see walkouts, whatever, because the middle class in particular has been hit really hard by inflation, and they've not kept up. And so Teachers, we've seen it in Ontario. You're going to see postmen throughout Canada. I mean, it's going to happen, and it's the same thing all over again. And it's a wave that it will be impossible to bring inflation back down to 2%. And the real rate of interest is going to stay negative right through the next 4 to 5 years.
Lastly, Pierre, talking about investing in this junior market, you gave us some advice yesterday, and then you say you have to love misery. Can you explain?
Well, I learned that from my partner actually, and he used to say, "I love misery," because the bargains that were available were unbelievable, and he always kept a big amount of cash in his reserve, and when everybody was like down and out, he would start buying like crazy, and this is where we are today. The juniors in particular are so unloved, it's not even funny. They're trading for a fraction of their value, and they cannot raise any money. Like the amount of money, because of the crypto implosion, because of gold does not perform, there's just no risk money available. The only money available is from the big companies who are flush with cash. If you look at, the Newmont, the Barrick, the Agnico Eagle, they have loads and loads of cash because they've done really well over the past 3-4 years. $1,800 gold, it's a good price, okay? Don't get me wrong. The mining companies are raking it in. And so these are the banks, if you want. These are the companies that are looking at the juniors today. And if you look at the deals being done, it's all mostly with big companies. Because they've got the cash, and they are very, very selective, however. So out of the thousands of juniors, there will be, maybe 10 that will emerge as real, sustainable mining companies. It's 1 in 1,000. It is still a very high risk business, okay? So we sift through deals every day, and as I said to you, my max is 5 deals. That's it, okay? That's my attention span, and I try to put everything into those 5, and if someone brings me a 6th one, I gotta sell one, okay? And I'm not gonna have more than 5. And that way I manage my risk. And so far it's worked out pretty good.
Pierre, always a pleasure.
Thank you so much. It's been a pleasure being here.
My name is Michael McRae. You're watching Kitco Mining at 2022 Precious Metals Summit, Zurich.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Inventa Capital.